The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 21st terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. I love Rocky Tuesdays. I don't mean Rocky from The Sense, but I love that story, the true story about Rocky. These markets here, they're going to be punching things out. This is a Tuesday, and over the past several months here, Tuesdays have been up days as we start our morning here. Futures are up a bit. You've got the Dow futures look like, well, they're up 19 points with fair value. Looks like the Dow should open up about right around 28, 29, 30 points or so. S&P futures a little bit more flat out here, up 1.25 right now, trading at 1665. But let's start off our day by taking a look at one of our tools. And this is the, when we take a look at tools out here, here's one of life's great axioms. This is what I want you to think about. You know, an axiom, a self-evident truth that requires no proof, such as to have more than you've got, become more than you are. That is today's tool out there. Think about it as you have grown throughout your entire life. To have more, you have always had to become more. What a great lesson to be able to pass on to our kids, our grandkids, and, you know, we get to see this play out time and time again. In fact, you're able to show your kids, grandkids, friends, whoever it is, show yourself this occurring on a continuous and ongoing basis. I always like to equate it maybe to sports out here. If we take a look at professional athletes, the great ones, the real great ones, they're always working on their game. And if it's true for sports, well, it seems to me that it's true for trading and investing. It's true for every aspect in your life out there. You know, always be on that quest to continue to better yourself. If you do that, folks, that's how you'll get more. Most everyone I come in contact with has a similar universal outcome or set of outcomes when it comes to life, and that's being to become wealthier and happier. It doesn't matter what level one is playing at. It doesn't matter how much, how little someone might have. People want to become wealthier, and that's a great thing because you can do so much with that wealth. So many people that you can help out there, and the two are really interdependent. Wealth and happiness do not go hand in hand out there. Now, the cool thing is that both of these outcomes are accomplished with what I call the same law of life, and that is learn to work harder on yourself than you do on your job, what I like to refer to as really personal development instead of a job. Now, personal development is perhaps the most challenging assignment that each of us will ever undertake. But the good news is that it's an assignment that lasts a lifetime. You see, what you become is far more important than what you actually get out of life. The important question to always ask, well, how about the important question to not ask is, what am I getting? Don't ask what you're getting. Instead, we should be asking, what am I becoming out there? Getting and becoming, well, they're like Siamese twins out there. What you become directly influences what it is that you get out of life. Think of it this way. Most of you have today what you've attracted by becoming the person that you are today. You see, income, when it comes to money, income rarely exceeds personal development. Sometimes income takes a lucky jump, but unless you learn to handle the responsibilities that come with it, it will usually shrink back to the amount that you can handle. If someone hands you $1 million, well, you'd better hurry up and become a millionaire if you're not one. A very rich man, very, very rich man once said, if you took all the money in the world, divided it equally amongst everybody, it would soon be back in the same pockets it was before. That's another one of life's great axiom. It's hard to keep that which has not been obtained through personal development. Always remember, to have more, folks, than you've got to become more than you are. Let's go take a look at these markets. Let's go see what they are becoming here. Right now, we'll start off with the ES Mini. We know where the bulls are hanging out. It is as clear as can be. I don't know what treasure it is that is underneath that area, but we clearly can see where the bulls are hanging out. If you're just listening in on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. You can always catch a live stream of the show on your smartphone by going to the homepage of tfnn.com. Over on the right-hand side, you'll see that button with three little smartphone devices. click on that. This show will be streaming to you live. It's also archived on Channel 9. Right now we're looking at the ES Mini, the 30-minute chart. If we go measure the retracement level from the swing point low that came in at 4 in the afternoon on May the 16th, that level, 1646 out there, all the way up to the swing point high that came in at 1230, and this is on May 20th. This is yesterday. That was out at a price point of 1670.75. If you go from the low to the high, you'll see that at 1661, that is your dead cat bounce. That is your 0.382 retracement. Well, we can take a look at the first move down in the markets yesterday. Got down to a low of 1661. Again, we're looking at the ES Mini. That took place at 2:30 in the afternoon. And as it was making that low, the bulls rushed in. They formed that little 30-minute hammer candle. That was after seeing a morning star reversal configuration. That's a 3-candle reversal pattern. That took place between 8:30 and 9:30 in the morning. That was yesterday. So that was the first sign of where bulls were defending a position here. Market moves higher, pulls back into the 0.382 level. We get a hammer that forms. Again, that was at 2:30 in the afternoon. We had another hammer candle that formed this morning at 6 a.m. That was at a price level of 1661.25. Bullish engulfing followed that. We had another bullish engulfing right out here as we came into the 8 o'clock hour. So we can see that the bulls are truly defending. If you were trying to draw a line in the sand and figure out where the battle, where the war was going to take place, it's very simple. It's at that 1661 level. What happens when you close below a hammer if, in fact, that happens? Well, if you're long, you're wrong. Now, there's a little level of support out here, and that's going to be at that Morningstar configuration right at about the 1659.75 level. If that breaks, what could you expect in the marketplace? Where would you expect, just simply by looking at that chart, set up your own expectations? Where is it that you would expect price to fall to if, in fact, that hammer candle would fail? Very simple. It head down to Suite 618. Just like if you're ever in the Tampa area, Clearwater, you'll come up and visit us at Suite 618. That level 1655. And if that doesn't hold, well, that'll be going on the elevator. You'd be bypassing our floor. You'd go up to the next floor, and that is the 786 level. That is 1651. So we know where the bulls are defending their position. We'll see if they continue to defend it today. And they should be able to defend it today. This is a Tuesday. And as you know, Tuesdays mean it's going to be a higher close. And if it's not, one might say, something to think about. Let's go take a look at some of these other markets out here right now. We've got the gold is off $17. Imagine that. Gold down $17, trading at $13.66. Silver off another 2% here this morning, down 45 pennies, trading out at $22.12. Is it trying to hammer away at a bottom out there, or was yesterday nothing more than a little short covering rally? I'll show you what I showed my newsletter subscribers this morning. It was absolutely a short covering rally out there. If we take a look at light sweet crude, that is down 39 pennies. That is still light sweet crude. Looks like that wants to make higher highs. Bad news out there. Certainly not what I want to see is higher prices at the gas pump. My goodness, it costs enough to fill up your car as it is. We've got copper now. Copper trading up just slightly here. If we take a look at the what the markets were doing across the globe last night, we had Asia, a little bit mixed bag out there. The Nikkei was up 20 points. It was down at the open of the session. I was able to get back to, in essence, a what we'll call an unchanged day out there, closing at 15,381. The Hang Seng, on the other hand, off 0.5% last night, off 126 points. The Shanghai basically flat. That was up 5 points. Over in Europe right now, we've got the DAX. It's down 4 points. It was down a little bit worse than that earlier this morning. And the FTSE is up 11 points. Our call-in number, 877-927-6648. Give us a call. We can go take a look at your equity, answer whatever question is that you've got out here. So let's go take a look at some of these charts of things that are moving here in the markets. Talk about things that are moving. You know, you had companies out with earnings before the bell, after the bell. Last night, Urban Outfitters was out with numbers after the bell last night. They closed at 44.49 right now. Last trade just fired off at 42.50 out here. Let's see, Urban Outfitters. What do they do here? They reported net income of $47 million versus $33 from a year ago, so not bad there. Also nice on the revenue line. Net sales $648 in millions versus $568, but still they are getting hit down about 3% here this morning. Best Buy, BBY, off a couple of percent, also out with revenues here before the bell. They closed at $26.81. They're trading out right now. Oh, they're up just a tad here. Their last trade just fired off actually at $26 92. That was 100 shares out there. Best Buy, they generated revenues of $9.4 billion versus $10.4. A little light there in the loafers. And net earnings, $110 million versus $262. That was really a light load out there. That was on Best Buy. We take a look here. We had, Dick's Sporting Goods. They were out with numbers, but really unchanged out there. So, Dick's Sporting Goods out here. What did they generate? Net sales of $1.3 billion versus $1.28, and income $64 million versus $57. But really, not really. How about that? It's not really changed here in the pre-market. Home Depot, that's a whole nother story out there. Up 3% this morning. They closed at 76.76 last trade. Fired off, it looks like about 79.30. Now, what the heck out here? Wait a minute here. 76.95. What am I looking at here? It says 76.95 out here. Well, I'll get that cleared up when we get back from break. We're going to go take a look at Goldilocks. We're going to take a look at silver. You know what we're going to do? We're going to go take a look at that U.S. dollar, Japanese yen currency pair. We're going to look at it on the monthly, on the weekly, on the daily, and then we're going to go look at it on an intraday chart as well. We'll go see if we can maybe peg down a trade out there. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. I figured out my problem. I just need to recharge my battery on my system. Actually, I had to reboot something. But now, if we take a look at the pre-market here, those folks out with earnings, Saks is leading the charge percentage-wise to the upside, up almost 6% here. They closed at $12.28. Their last trade fired off at $13 even. Steven, they reported net income here of $19 million versus $32 million. From the year prior. Net sales $793 versus $753. They are being rewarded here a bit at the open. We had TJX companies also out with numbers. They closed at 51.35. They're down a little bit, maybe about 1% here. Last trade firing off about 50.75 out there. They did net income of $452 versus $419. So they beat the bottom line. They also beat the top line, but not being rewarded as much. They generated $6.2 billion versus $5.8 billion from the year earlier. After the market today, we've got Dell out with numbers, HP, Intuit, and NetApp out there. Let's go take a look here at gold. I showed this. I've mentioned this on the chart. I've mentioned this on the show several times. Each Friday, the CFTC, they release data that's available to you, the Commitment of Traders report. And there's a lot of great useful information. There's a lot of information to actually sift through. One of the things that I pay attention to in both gold, silver, the treasuries out there, oil, some of the currencies, it's really taking a look at the commitment of traders, both from the commercials side. That's really your large, that's your big vessels, your big banks, your big players out there. That is the big money. If you've ever wanted to try to follow the big money and understand what it is that they're doing, well, this is one element. This is one way for you to be able to take a look at doing that. And then you've got what we'll call the group of individual traders, what's classified in the CFTC data as non-reportables, a category, I guess you could say, that, so small that maybe they don't really care much about them. However, very important for us to be able to take a look at what each of those two groups are doing out here. Now, what I've got on my chart here, beautiful chart, in my opinion, it's the weekly chart of gold, shows that long-term trend line that was coming off of the lows back here in 2008, the October 24th low, the week of October 24th at the 681 mark. Now, we saw gold first really struggle as it broke through that area, and it did that the week of May 11th, 2012. Once you break a trend line, doesn't matter whether it's a channel line, a trend line. What price will eventually do is try to get back inside of it, and it successfully did. Gold successfully did the week of September 7th, 2012 out there, and made it all the way, made a 100% move of a move as it did. That got back into the swing point highs of March the 2nd of 2012, as well as the swing point highs in 11.11.11. Out there right in the 1804 range, and that's really what set up our sideways consolidation move. Again, you're looking at a weekly chart out here. Now, down in the bottom portion here, we've got volume, but above volume, I've got the commitment of traders, the non-reportables. That's that group, those individual traders, and this is their net short position as a percentage of open interest out here, and it's the highest levels ever. The highest levels ever. So you've got in one side of the boat, you've got all of the individual traders at the highest levels of net short possible. Now, this data here is as of Tuesday of last week. So whatever changed between Tuesday and this morning, it's not going to be reported here, not going to be reflected in these numbers. What I have just above that, that's the commercials net short position as a percentage of open interest. You can see that's at its lowest levels. That means they are getting more net long than they are net short. Now, which group of traders do you think is going to stay with their position longer? Who's going to be less spooked out there, if I use a word like that? Who is going to who is going to be stronger? Who's going to have more conviction with regard to their trade? The large, big money that can handle, that know that they're going to take time to get into trade, they're trying to set up longer-term trade, or is it going to be those individual, non-reportable type traders out there? Well, what we saw yesterday was was that the beginning of a bounce, the beginning of a low, or was it really short covering out there? Now, how do we really ever know other than just simply trying to reach some conclusion based on data that we have? And that's all that one can do. Well, the data that we have here, I say the commercial traders are the ones that are going to stay in their position longer. They've been building this net long position for quite some time here. They do believe that gold is going to see a bottom out here. That doesn't mean that it was yesterday, and it's the individual non-reportables that are the ones that are going to, where we're going to see some strong short covering rallies. And in my opinion, that's really what we saw take place inside Goldilocks and silver. This chart looks really the same when you take a look at gold or silver with regard to the large commercials or the non-reportables out there. Right now, we've got gold trading down a bit here. Gold is trying to form a low. The question is going to be, is it going to be on the daily chart out here as we take a look at that real quickly? Where is it? That was that price of $1321.50 out here. We'll see if that low is going to hold. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. We got the Dow up 44 points, trading out at 15,379. S&P up 3.5, trading at 1669. Composite up 4 points as well, trading out at 3501. Russell 2000 slow out of the gate, up almost a full point, trading out at 998.87. Google up 85 cents. Apple down $3.60 right now. Microsoft up 11 ticks. Intel back 5. Cisco off 3 pennies this morning. Leading the charge, the upside, well, other than the ZSL, that's the ultra short for silver, which is up $5 right now. We've got Medtronics, MDT, out with earnings. They're up 6% here this morning. That's up $3 and change. Just behind them is Home Depot. Home Depot HD is the ticker symbol. They're up 3% here this morning, up $2.35. First Solar, FSLR, up 6% this morning, up $3. Herbalife, up $2. That's up 4%. Amazon.com, up about $2.60 right now. JA Solar, which had a huge day yesterday. I mean, huge day. That's up another 18% this morning, up $1.78 out there. YY Inc., that's up 5%. I don't know what YY does. YY is their ticker symbol as well. Behind them, you've got Trina Solar, up $1.42. Allegrin Inc., AGN, is up 70 cents out there. To the downside, Apple leading the charge, off almost $3 right now. We've got the GLD off $2.64. Then you've got Carnival Cruise Lines. CUK is their ticker symbol. They're off 5% this morning. Solar City, SCTY, off 40 cents here. iGate Corp, IGTE, off $1.76. Marathon Petroleum, MPC, off $1.19. Urban Outfitters, URBN, off $1. Agnico Eco Mines, IEM, is off $1.06. Tata Motors, TTM, off 95 cents. Again, our call number is 877-927-6648. Let's take a look at some of these stocks here, popping and dropping in the market. We got Home Depot. Home Depot making a new high this morning. It's been selling off ever since that high, up at $79.40. That has been the high right now, trading out at $78.79. This thing has been an absolute rocket ship. If we put this on the, I was noting this on the weekly chart out here. Let me put the weekly chart on here. And coming off of the August lows, nice hammer candle that formed the week of August the 12th, 2011. That low, $28.13. And, you know, in a year and a half, it's gone from $28.13 to $78.72, where it's trading right now. So Home Depot looks pretty darn good out here. On the daily chart, I'll go back to the daily chart out here. We did have this little bear sash candle right up here at resistance, or what could be resistance, or what may prove to be resistance now. That was the May 16th high, 78.54. So if Home Depot closes back inside that, you know, it's setting up a resistance area right around 78.54. And that's what you've got to take that's what you would be paying attention to here on Home Depot. Again, on the weekly chart, you know, even if I were to give it A to B equals CD, and there's really no retracement here. So, but still, if we just take a look at breathing patterns of the market, the A to B equals CD says 77.82 is the 1.272 level of that. That says if it stays above here, you'd see 86.27 eventually inside of HD, Home Depot out there. So clearly off of the bottom. We take a look at a couple other equities here. moving in the marketplace. Let's see, Tidewater, TDW is the ticker symbol. That gapped up this morning. TDW, you can see it has a shooting star out here that was formed a couple trading sessions ago and may, in fact, form another one here today. We'll see how this works out. But you got the shooting star right here. Now, some people might call that a bearish candlestick out here, that May 17th up at the high, because the shooting star is opposite of the hammer candle. But what you really need to always do is you've got to stitch more than one candle together, especially when you have a gap up. And if you were to take a look at this, if I blow this up here on TD, in fact, I use this little system here just to show you how it really works. Let me do this circle. Yeah, if I do this, so what TDW did, it opened up. If we take a look at the prior session right here, I'm going to draw this in, and I'm just going to do it like that. That's not it's not exactly the box that I was trying to draw. But remember, I was kicked out of art school at a very young age because I had a problem drawing a really good stick man. So that's why they went ahead and they said, Steve-O, we think you'd probably be better at math. So that's why I like Leonardo Fibonacci so much, I suppose. However, I do love the arts. Now, let me turn this green. Let me turn this as lime green as I can get it out here. That's as close as I'm going to come to matching this. Now, I'm going to go take a look at that hammer candle, or that shooting star candle. And if the candle really looked like this, because that's really what the candle is, if we take a look at where the open was of the prior session here, we take a look at that open, which was May 16th, and that open was the close, in essence, 56.80. So on the session that formed that shooting star, would you call that a shooting star? And the answer would be no. That's why that was not a bearish candle at all. You've got to fill in those gaps, folks. You got to fill in the gaps in life as a general condition. So you got to do that on a stock chart as well. Now, what we're seeing here is another gap up and another shooting star, but you have to really do the same thing. Of course, the trading session here has not ended, but if it were to end like this, you would still need to do the same thing, and that would not be a bearish reversal signal, not in my book out here, because you would still need to go ahead and fill in the gap, and by filling in the gap, it would look more like this out here. And if I go ahead and I color that in, I do that in, there we go, get my lime greeny going out here, and if we do this and you take a look at that, you tell me whether that is a bearish or a bullish looking candle out here. That didn't do very much when I just shrunk it. But you get the idea if you're following us on Tiger TV out here. That is on TDW as the ticker symbol. Now, instead of just looking at some of these things here, popping and dropping all over right now, we've got the Dow up 50 points, and the S&P is up 370, and it is Tuesday. And so if the market doesn't close up, that would certainly make you say, something to think about. But before I go take a look at the U.S. dollar, Japanese yen currency pair, I want to do that. I'm going to sneak in and take a look at what's going on inside the ES mini chart out here. Let me put this, give me 1 second here, ES mini. Let me pull that up on this screen right here. So I want to see if it still has not taken out its highs from yesterday at 16.70.75. We can see here on the 30-minute chart starting to reach that overbought condition. Hasn't totally reached it yet, but it is it's working its way up there. So we'll see if this is going to be a little double top. Now let's go over back to the currencies here. Let's go see what we can find is going on inside that U.S. dollar Japanese yen currency pair. So this is the monthly chart. You know, we featured this over the last couple of trading sessions out here. This is the monthly chart showing the descending price channel that the U.S. dollar Japanese yen has been moving in. We also show here coming off of the highs from August of 1998 out of that 147.66 level all the way down to the lows that have now been established out here in October of 2011 out at 75.55. What we also have witnessed is a 0.382 retracement. A nice move, no question about it, but a dead cat bounce nonetheless, a place where you would typically see folks getting off of a elevator out here, taking some of their profits. We'll see if that's going to happen, but between the descending price line, between the price channel, I should say, between the dead cat bounce, the 0.382, that should be a likely outcome. However, we got to go down and we got to take a look at some of the other time frames. So we go from the monthly here. Let's just simply go into the weekly. What does the weekly show us? Well, in the weekly chart here, all those horizontal lines that you're looking at, those are primary trading range boundary lines for the U.S. dollar Japanese yen. We can see it's up towards its midpoint here. Again, this is the weekly chart. So last week it got up towards that midpoint. Right now what it's done here during the week, it's come back and tested the lower boundary right in that 103 area. The low of 102, I should say. 101.95 is where it has gotten down to. If you do not see it close below this week, next week, below 101.95, before it, then what it would suggest is that it actually wants to go up and tag the 104 area. That's the next top of the primary trading range. So the weekly says, maybe this still wants to spike higher and get up into the 104. So that's what the weekly shows out there. Let's go take a look at what the daily chart here looks like. On the daily chart, we took a look at this yesterday. We took a look at the consolidation pattern that the U.S. dollar, Japanese yen have been traveling in for nearly, from the time frame of, we're going to call it from April 5th until it broke out on May 9th. So nearly for an entire month, it moved sideways. It completed that move by at least equaling that move as it moved higher on May 17th and as it got up to the 103.29 level out here. So the weekly chart also showing those same primary trade, or the daily chart, I should say, showing those same primary trading range boundary lines out here. Now, let's go take a look at an intraday chart. So we've gone from monthly to weekly to daily. Now let's go down. Let's take a look at a 30-minute chart out here. Now, on a 30-minute chart, interestingly enough, what we see here is a really beautiful three-drive to a top pattern. Now, let me show you one of the things that you should do. Now, most charting software packages allow you to be able to measure the time between swing points. In this case here, the swing point that I'm using for this three-drive to a top pattern is one that came in at 7:30 in the evening, 1930 military time on May the 12th. That price high was 102.14. Then the next high that we're going to use is the one that came in at 8 a.m. on May 15th. That price level, 102.755. Then the next high that we're using is the one that we saw take place on Friday, on May 17th, coming in at 16:30 hours, 103.279. Now, what you can see here, the expansion between these three swing points. So the first drive is what we're going to call is that 7:30 p.m. time frame on May the 2nd, May the 12th. The second drive out here was that little high that was put in at 8:30. Not a little high, but a high. And then the next drive was the one that was put in on Friday. You can see the expansion between drive 1 and drive 2 on my system. I'll tell you what it reads. If you're not seeing this chart in HD, you can. Just simply go to the homepage of TFNN.com and sign up for the Tiger's Den. Go check that out for 30 days. These charts will be HD in there. You'll be more able to clearly read these numbers and print out the charts, quite frankly, as well. Now, as we take a look at it, it says 1.70. That's close enough for me as a 1.618. I'll give it a little bit of room out there. So you have a nice 1.618 expansion. And if you take a look at the drive 2 to drive 3 pattern out here, again, going from about that 8 a.m. session, right around 102.75 out here on the 15th of May, all the way up to the high on Friday, you see that is a 1.618 expansion out there. Then the other thing that you want to do is these are not patterns to be forced. These are patterns here to be able to measure time. You want these to be nice symmetry out here. Well, if we go from that first drive to this, I grabbed the wrong tool out here. It's helpful. It's helpful, folks, when you're doing this to always grab the right tool. In this case here on my system, it's what's called a cycle tool. Now, I'm going to go ahead and measure time from, as you can see, from the first drive to the second drive, and look at that beautiful symmetry inside this market here. Look at that beautiful time symmetry inside, going from drive 1 to drive 2 out there. That, folks, is a 3-drive to a top pattern. Now, what do you expect? You expect the price move to move down to that first drive, and it has not done that as of yet. That is down at the 4 a.m. time frame here, down to the low of about 101.25. Now, what we have seen here so far is we saw the first move down, and it was pretty much a straight move down coming off of the open Sunday evening. If we take a look at where that move was, if we go simply from we'll use a couple of different retracement levels. We're going to go right from the low of that first drive, 4 a.m., right around the 101.25 level, all the way up to the high put in on Friday. And what you're going to see is a 0.618 retracement. Now, the actual number, 102.04. Now, how is it that a market knew to come down to about the 0.618 level before it would go ahead and make its first bounce? Pretty cool, isn't it? That's why you want to make sure you're using Leonardo Fibonacci's summation numbers out here. Now, on top of that, you always want to add some different tools to your to your indicators. And there's all types of indicators out there. Just simply learn how they work. Well, if you take a look at that relative strength or relative weakness indicator, take a look at how this worked here. The EKG of the trading markets out here works on all different tools and works on currencies as well. Take a look at that 3 drive to a top being formed, and take a look at where the market was. An extreme overbought condition up at this 77.6 level of that relative strength indicator. Now take a look as it makes that retracement down to that 0.618 level. Where was that? That was in the extreme oversold territory, getting down into the low 30 range, got down to 29.46 as it made the low coming in at 7 p.m. on May the 20th, as it made its low out there. So now you've got what the market should be doing, that EKG, a 0.618 retracement, and of course, if you just were to focus on the candles out here, you would see the bullish formation candles that formed over those next 3 to 4 sessions out here. Then where does it move to? Well, how about this? From the top, from the high put in on Friday, to the bottom that came in down here, that came in at 7 p.m. Yesterday. What is it? What does the market do? It makes a 0.618 retracement again. Gets into that 102.83 level. The actual number that it got up to is 102.875, and that came in at 8 o'clock this morning out here in the market. Now, it's possible that we're seeing an A to B equals CD. We're seeing a Gartley pattern that forms out here. It's not really a Gartley pattern right now. Why isn't it a Gartley pattern? Hey, that's a great question. And the reason is because it hasn't formed that required A to B equals CD. Your A point on this would be the low that came in at about 7 o'clock in the evening. There's your A point. Your B point out here that came in at 21:30, and then the low down here, sometime shortly after that, right around midnight. The 1-to-1 A to B equals CD would take you just slightly above that 0.786 retracement, right around 103.13. So the question is the intraday chart signaling to us that we might start to see a pullback in the U.S. dollar, Japanese yen? 877-927-6648.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. It is Takeoff Tuesday. The market's taking off topside here right now. The Dow is up 62 points, S&P up 5. You've got the Russell 2000 up about a point here. NASDAQ up 6 points. Let's go take a look here at the King. The King also taking off out here. We got the U.S. dollar index. We take a look at this chart here. We can see, number one, the U.S. dollar index has made a 100% move of a move. That was coming back to the swing point high here from July 24th, 2012. That number 84.25. Right now trading out at 84.15 out here. Took a little bit of a pause yesterday, but continuing to want to move higher. Now, what we do know out here is that when you have failed Gartley patterns, and that's what we have, we've got a failed 0.786 Gartley pattern out here. We've been showing that Gartley pattern, that Gartley sell pattern, finished right here on March the 14th, right around March the 14th, out at the 83.18 level. That just simply turned out to be a failed pattern as the U.S. dollar index went ahead and made that move of a move. And when you do that, a failed Gartley turns into a butterfly. Now, we can see here yesterday on the daily chart, that's what we're looking at. The U.S. dollar index on Friday getting into that overbought condition, worked its way off just a tad yesterday, now has room to run to the upside out here, and that's really what it wants to do. It wants to move up to what we know is going to be one of the two butterfly levels. That's either going to be 1.272 or 1.618. Beautiful Fibonacci numbers coming together here at that 1.272 butterfly expansion. That would be $85.79, give or take some pennies out here. That's the 1.272 expansion of that 100% move of a move swing point, that July 24th high of 84.25, down to the low that came in on September 14th. There's also a 2.618 expansion, and that's from your November 16th high out here. That's really what measures that's our B to our C expansion. That's the 81.51 level down to the C point that came in on February the 1st. Now, so if King Dollar is on the move, if we know that it broke a 0.786 retrace sell pattern, which is going to turn into a butterfly expansion, that would say, looks like the dollar index should move up, right? Okay, so that's now you're going to go ahead and say, what does the dollar index actually correlate to? And what the dollar index correlates to is the commodities, not the U.S. market. It absolutely doesn't. I'll show you that during the next show. I showed you that yesterday, but I'll show you that again during the next show. It correlates to the commodities out here. That's what I've got on my screen. I've got the gold contract out here. The black line that you're looking at on my screen, that is the inverted U.S. dollar index. That means as the U.S. dollar is getting stronger, it's moving lower. Just simply to make the correlation more visually and easy to see, you can see that the U.S. dollar index tracks, not exactly, but, correlates 90% of the time to the actual movements that we see inside gold out here. Don't be measuring the where it's because they're on different scales here. It's more of the direction and the angle than it is trying to overlay exactly on price points or anything like that. So that's the black line. Hey, by the way, the red line here, that's that GDX ETF, which, the gold miners had a nice bounce yesterday. When I opened up the show, was taking a look at the CFTC data, how all of the how the individual traders are short in gold. That's where you expect those dead cat bounces to come to. Well, if we expect that the U.S. dollar index is going to go higher, we know that we've got this correlation here. Makes sense to me that, gold probably hasn't found its footing. It hasn't found its bottom, nor has the GDX, because if you take a look at that correlation out there, folks, that's at least what this message of the markets is saying to us when we take a look and put the U.S. dollar index into the commodity chart. Folks, it is Terrific Tuesday. If you're off to start your day, just simply have a terrific day. And always remember, you have an amazing power within yourself. That power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks.
Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.